It's a real funny coincidence and a real funny shame that two companies that Jeremy LaFraud has owned in the past and touted on his channel are both down 20% in 2 days. It's truly remarkable, and only someone of his specimen can achieve that. But this has been an interesting week in the market so far, with Walgreens and Nike both having 20% crashes in 2 days. These are two of the most beloved stocks by a lot of dividend investors just 5 years ago, but the crazy switch up has a lot of people worried for them and their long-term future. But today I'm going to be sharing my honest thoughts on both of these companies. I've owned both of them in the past and have both sold out of them in the last year. But buy my course and call me a messiah, because I actually sold out of Nike just last week before the stock went down 20%. This is not a prediction whatsoever. I had a very small position. Go watch that video if you haven't already. With all that out of the way, let's get into the video.
Hello, I like money.
So we'll start off with Nike, because I think this is the most relevant one considered to the channel, because I actually made a video about it literally last week, and I sold out of the company last week. Complete luck, complete coincidence. Thank God. I only would have lost about like $20 or $30 on the 20% dip today, so very small position in the portfolio that I trimmed out, and I put into Visa, much better, higher quality company in my opinion, and SHG. Overall, with the company, is just trading at a really high multiple still, not a lot of growth ahead of it, and obviously this is not a good look for it, but it appears this could be a bit of a value play now. So it appears the reason the stock is down 20% today is they posted dismal fiscal 2025 guidance, and a lot of people are not happy with their new CEO that joined in January 2020. Now, I first bought the stock in January 2021. Now, obviously, Wall Street is only focused on the 5-year chart, and as long-term investors, could this be a potentially solid opportunity to buy back into Nike? Well, John Donahoe, the new CEO, is on thin ice right now. He's had lackluster performance as CEO. The stock just a few years ago is pretty much up 50% from where it's at today. They failed going direct to consumer, but I always say with Nike, their brand is so strong that it's one of the only companies in the entire world that can have a $10 shoe, sell it for $300, and have it instantly sell out. I think Nike's brand is not really in question. It's really the execution to the leadership at this point. Their growth has been staggering over the last couple of years, and it's not a great time to own Nike. Well, of course, that's what everybody says after the stock goes down, but let's take a more rational approach to it. And now analysts and other people outside of the company have their different opinions on the company now, saying that they're losing their credibility. Now, that's other people's opinions, and you guys should know, if you're long-term investors, the best time to buy companies long-term is when other people are fearful. Or when other people don't want to get into the company, it's usually the best time to get in if you're a long-term investor. But me personally now, as an investor, I'm not really attracted to clothing companies like that anymore as I once was, but I think Nike may be an exception just because of how strong their brand is. But at the same time, Nike's one of the only clothing companies today that in my eyes has proved staying power and has staying power for the future. Kids wore Nikes when I was in elementary school, middle school, high school, college, and I don't see that trend stopping. But just because it has the qualitative measures like that doesn't make it the right investment. Nike is still massively overvalued relative to its cash flows. Now, obviously, that could be a little bit of bullshit because of how strong their brand is, and that's played into it, obviously, with that premium. Also important to note that Phil Knight, who is a legendary CEO, and I recommend you read his book, reaffirmed confidence in current management and said the company will be back. This seems to be happening with a lot of my holdings recently, cough cough Starbucks, but the company said that its fiscal 2025 sales are to be down mid-single digits, which is previously expected them to grow, so it appears they're not going to be having a good year next year. Shares of Nike are down 20% today, the day after the quarterly report, and the company's market value is currently at $114 billion. So short-term sentiment is an all-time low for the company, it appears, and they may have a few rough years coming ahead. With a company like Nike that's priced like it was at least, companies with a lot of growth in the future that have crazy premiums on it don't have a lot of margin for error, as you saw with Starbucks. Now, on this channel, we're long-term investors, and this appears to be a really good long-term buying opportunity for the company, but there are still some major red flags. The management is definitely a question mark at this point in the company. It's absolutely a value play for me, and I'm going to have to be a lot more patient to see if I'm going to buy back into the company. The growth is not amazing, especially compared to where it's priced at. But as a long-term investor, seeing a bad year or two, this could be a great time to enter into the company. It's also at COVID-level lows. So what am I doing? I'm going to be very patient right now. I definitely want to see where it averages out over the next couple of weeks. Maybe if it hits the 60s, I'll be entering back in. I don't see myself having a crazy large position, though. This will be definitely more of a value recovery play. Next, we have Walgreens, which is a stock we also talk a lot about on the Cash Flow Kings live channel. I want to send my condolences right now, and I also want to point the finger at people who are using Walgreens and putting down people who invested into it. I don't think that's very cool to make fun of people when they're losing money. Obviously, only Jeremy Lefebvre, it's funny to point at him. Both Walgreens, where I also am really concerned that a lot of people may not be paying attention to it now, is Realty Income, as Realty Income is one of his biggest tenants is Walgreens, and closing a lot of stores is not a good look for them. So Realty Income also could be seeing a bit of a hit here. I think the hit on retail like Walgreens and CVS has been way bigger than anyone could have really expected. Like every time you go by one of these plazas or stores where Walgreens is at, it seems like nobody's there. Anytime that I go to Walgreens is absolutely a dump. The employees aren't really friendly, items are scattered everywhere, and it's not a positive shopping experience. And as somebody who likes to focus on quality in the businesses I invest in, it's definitely not something I'd be interested in. Obviously, it is a value recovery play. Theft has been an absolute huge hitter to this company. I think you're seeing big retailers like Target and Costco, Walmart. Those are companies that kind of survived the theft onslaught that happened last summer, and now we're kind of getting out of that hole, and it appears that completely consumed Walgreens, unfortunately. Roz Brewer is a complete bum of a CEO, and she abandoned ship like an absolute coward. They announced they're closing stores, they're cutting EPS, profit forecasts, and it's not good times for Walgreens right now, I'll be completely honest. I don't think it's a really good look for them. I'm curious to see how they're going to have to readjust in the future to keep their business alive, let alone thrive. I think an important lesson that we can take away from Walgreens is that past performance is not a prediction of future. From 2009 to 2016, 17, and 18, Walgreens could even be considered a long-term quality compounder by some, but now looking at it, it just shows that anything can happen in the companies, anything can happen in the stock market. It's best just to hold on to SPY. I don't even blame anybody who bought Walgreens either. This was an unpredictable thing that happened with them. Even as somebody who dumped the stock a while ago, I'm shocked by how fast retail like that has been dying. And it even makes me worried for a company like Realty Income that is invested in a lot of that kind of retail. Alright, hope you guys enjoyed the video. If there's any takeaways from this, don't copy idiots' picks on YouTube and buy the S&P 500 and chill. Thank you all for watching. Smash the like and subscribe. Do Dividend stocks, not drugs, and have a good one.